Hey, what's up, everyone? Chris Lopez here, along with Jenny Bayless, to bring you market updates for the Denver market and the Colorado Springs market. So this is our monthly update on both markets for July 2021. Jenny, how are you?
I'm doing awesome. How about yourself, Chris?
Doing really good. I will say a little happier with the stats this month than some previous months. So
Yeah, we're
little
getting
better in that
there.
sense.
I think we're
Yeah.
getting out of the hole a little bit. So,
I mean, you also just realistically can't sustain a 20 to 25% appreciation rate. Like that's just not realistic. So
exactly.
yeah.
Yeah.
Yeah, I'm not an expert, but that's what my crystal ball says. All right, so let's, I got the power of the mouse, Jenny. So I'm gonna click over to Colorado Springs first. Kind of start giving us a rundown, some stats on here. Like
Yeah. Yeah.
where
So,
tell me where to scroll.
yeah. So we can scroll down a little bit to showing trends. I like this chart. I'm sure that everyone who's been following close attention, the showings per unit have been significantly higher than they had been in previous years. Like usually we see seasonality trends. And then the beginning of 2021, it was just almost off the charts. I think they had to, expand the access a little bit on that. But we're finally in July back to normal. I'll call it normal seasonality in just the sense that it matches July showings of last year. So I think that's probably important to highlight.
Actually, I'm gonna pull up the Denver one side by side. We'll try something different this month.
Cool.
Because at least for some of this data, it's so interesting. At least for me, I find it so interesting comparing these two markets.
Mm-hmm.
So our showing trends here in Denver, once I find it, very similar thing. I mean, Springs was 18 to 20 showings per listing. Quarter one started trailing off here in quarter two. Denver was at like 20 to 22 showings per listing. Quarter one, quarter two started dropping off. Same thing. We're still like one showing above where we were last year. We're right about the same as the year before, but we're starting to see kind of, I'll say, normalcy in the market and maybe some seasonality normalcy as well.
Mm-hmm. Yeah, it's really interesting comparing the two charts side by side because they have the exact same shapes historically. So that's really interesting to see that.
Yeah. Yeah. And for people listening to the podcast here, you can always check the show notes, check the YouTube video. We have all the graphs up there as well. But yeah, it's just, they're almost mirror image of each other. It's really interesting.
Mm-hmm.
Which is, a good thing to keep in mind as well, just for simplicity standpoint. If you guys are hearing a stat in Colorado Springs or vice versa in Denver, right now, historically, obviously numbers are different, but it's a very similar trends that both markets are going through. What about your just overall active listings and all that data?
Yeah, so active listings went up a tiny bit. So I guess 3.5% from last month, which is less than 100 units more than what last month's were. So nothing super drastic, but I guess, at least it's showing that we're moving in the right way, that we're getting some more listings posted. And then same with, I think just average sales price and median sales price. Median sales price managed to go up still, just when I think that we're kind of, going to stabilize for a little bit, it goes up just a smidge more. So 0.4%. So it went up from 448,000 to 450,000, which is just absolutely wild to me that that our median price point is at 450 at this rate, compared to last year at 372, which I thought was very high as well. So it's just, it's creeping up at a slower rate, but it's still going up. I mean, I would imagine at some point it's going to level out, but I guess we'll see on that.
For the median average prices?
Yeah, average went down a little bit, but that can have one mansion or whatever selling. So
I'm still holding my breath and got a cup of coffee bet on that we might see some just price declines later this year, just based on that, just as the different unit mixes start selling or not selling as much. Like we might actually see some on paper some overall price declines on the average or median home prices.
Yeah, I wouldn't be surprised about that either. And I guess just to kind of highlight for that, if we start seeing news articles, oh, median prices are declining, I think it's at that point it's probably better to take a step back and look, okay, well, how was it still year over year? It's still going to be significantly high teens, low 20s, higher than it was last year. So yeah, but just kind of taking that larger lens approach to that.
So for some Denver stats here, I like active inventory. Our active inventory at the end of this month was 30% higher in July than compared to June, but still 37% lower than it was a year ago. So we're seeing inventory creep up. And we get a really nice graph up here in Denver that I wish the Springs would put out that shows the inventory under contract here. You can actually see right here, it looks like a spike up in inventory on the graph here, which is good to see. Maybe active inventory will actually get back above under contracts at some point, which would be a much healthier market once that happens. But our new listings, I think you said your new listings were up, right?
A tiny bit, yeah. Very marginal amount.
Yeah, our new listings are down both over like prior months from June to July, and also year over year. So
wow.
You're up a couple percent. We were down, 6 to 8% between the two. So that's, go figure. Once I said they're all basically about the same. Now they're not, right?
I think we were swapped last month, right? I think
I can't remember. All these numbers sometimes blend together. Yeah. Now, what about, okay, so I don't want to go too heavy on stats just because throwing numbers, especially at two markets, can, put people to sleep. Mm-hmm. Any other stats you want to talk about before we just kind of go into just some more general updates?
Maybe just the showings, or excuse me, the days on market. I think that one stuck out to me because it's still continuing to decrease. I think
where do I need to scroll to?
I think it's all the way at the bottom, I believe. Yeah.
Average days on market?
Yeah. What does that say? 7?
7, yeah. So July 2020 in Colorado Springs was 20 days on market. June 21 was 9 days. July 21 was 7 days.
It's just wild. So, things are still getting snapped up very, very quickly. So it's still kind of a market that you have to act fast if you like something in it. But I'm hoping that those will go up a little bit. Hopefully we'll get some more inventory. Hopefully that will be a little bit more reasonable, that you don't have to, make a decision extremely quickly.
Yeah. And I think our average days on market, we're seeing, I think, pretty similar stuff. July 21, our average day was 9 days. You're at 7. Last month we were higher. A year ago we were much higher as well. So again, same trajectory. Mm-hmm. But what we've noticed, I don't know if you're getting this, you and Lee are feeling this down there. Are you, when it comes time to put in offers on properties that you and clients are looking to buy, what's the competitiveness feel like on there? Are you guys still bumping up as many offers, or is that scaled back some?
It's still extremely competitive. Leah was telling me this morning that she showed a client a home, and by the time she called the listing agent, they said, yep, we have a couple offers, $50K over list. So just to kind of, give a feel for how that is. We've noticed that some homes that are priced inappropriately, so priced a little too high to begin with, those tend to stay on a little bit longer than the ones that are priced competitively. So I don't know if it's like a psychological thing. People don't want to bid lower in this market, knowing how everything has been. But, people know the intrinsic value pretty much. So not sure, if that has anything to do with it. But yeah, still really competitive for really good properties. I was able to get some clients under contract on a duplex, and we were very competitive with our offer, and there's a lot of competition as well.
Yeah, I would, from just talking with our agents up here in Denver and just other agents around town, um, the finger on the pulse is it's still competitive, but it's less competitive. Like it is mirroring the data, where since we have more inventory, which is great for breathing room, rather than it being 10 offers on a property, it might be 2 to 4 offers on property, or quite a few, which is always nice,
Mm-hmm.
especially since half the offers are usually pretty cruddy ones. So if we can have less offers overall, maybe only have like 1 or 2 other good offers competing against, it makes it a lot better for our clients, which are primarily buyers, as they're buying house hacks and buying single family, or buying rentals as well. So as we kind of wrap this up, any interesting news articles or other tidbits you wanna cover, Jenny?
Yeah, so I think I sent this over last week that I know people have probably heard me say that 80911 was ranked as the hottest zip code in America for 2020, and another Colorado Springs zip code took the #1 spot for 2021, and that's 80916, which is over by the airport. I know our clients have probably heard me talk about that area as one that's poised for growth, just because of all the development that's going in over there. So definitely one to watch. I thought that was pretty interesting that I think there's like 2,800 zip codes that it beat out. So,
And so that's from a national perspective, right?
mm-hmm.
Yeah. So from taking that data point, what is that changing your investing or the advice you're giving to your clients?
Nope, I don't think so. I think everyone's probably heard me say the same broken record of which areas I think are poised for the largest growth, and I'll stick with those.
And in terms of just like, I mean, we're seeing it become a little bit less favorable to the seller. I mean, it's still very much a seller's market, but it's not as extreme. Again, I know here in Denver, we want to be around 24 to 30,000 homes, which kind of start getting out to be a balanced market for like buyers and sellers to be on equal footing. We're still at 4,000, so which is better than 2,000 active units, but we're at 4,000. But to give you that context, that big picture, on that sliding scale, it's become a little bit more favorable to the buyers. It's still definitely a seller's market, but in terms of just market conditions, interest rates, rents, and everything, has anything changed in terms of like good time to buy, bad time to invest, and anything like that change for you, Jenny?
No, I don't think so. And then coupled, with the fact that we've been saying it's probably a good time to buy on the interest rate side of things being low. It's a good time to sell, get rid of properties that you don't necessarily want anymore. And then, one of my concerns that I've been having is rents not increasing at the same rate that home values have been. But we're seeing that shift as well. So rents are starting to creep up quite a bit. So yeah, I still think it's a good time to buy rental property.
Yeah, and I mean, you and I talked about this on the YouTube live last week, where same thing. I mean, rents, I mean, not creep. They had a pretty significant jump, this part of the year, and vacancy dropped quite a bit as well. And of course, this is from like a lot of times bigger data, but like same thing. We're starting to see rent prices. We had that data like on the ground from our properties talking to clients, but now we're actually starting to see data that backs it up.
Mm-hmm.
So from investing standpoint, landlord standpoint, that's good to see. Rents are continue to climb as prices go up as well. And so I agree with you. Like with everything going on, nothing. My advice hasn't changed. As long as you're still financially, sound, your job, your business is, still doing well. You got your proper reserves in the bank. You understand the risk of everything from a long-term wealth building perspective. there is, still a lot of stars aligning for it to be a really good investment. I mean, I bought another place actually just about 4 weeks ago, maybe 5 weeks ago at this point. So nothing is scaring me. I'll hold that place for, a number of years, if not longer, and just ride the wave of growth. And just, use that as another piece of my portfolio to build wealth. So if anyone out there has questions on the market, wants to get in the market, wants to buy properties, wants to sell and trade up, talk to us. This is what Jenny and I do. Jenny's down the Springs. I'm up here in Denver. We share similar philosophies. If you're debating between two markets, reach out to us. We often have clients, especially in 1031s, kind of looking at both markets to find the best fit. We have the team in place. We know the numbers. We can help figure out what the best market, best strategy is for you. And then most importantly, execute it. So if you guys have questions, please reach out. If there's other data points you want to learn or more market stuff, reach out as well. We love talking about this stuff. We just try to limit how much we, dump on everyone through a podcast video with stats, but happy to talk more details, or always go check out the blog post for all the graphs, all the stats, all the numbers. They're all up there. So Jenny, this was great. Thank you so much.
Thanks, Chris.
All right. We'll see everyone next month.